All right, so today we're diving into Japan's real estate market. And while all the headlines are screaming about rising prices, what's happening on the ground is way more complicated. It's really a story of a market that's literally splitting in two, with one half booming and the other, well, it's looking pretty shaky. So that brings us to the big question, right? Is Japan's housing market booming or is it breaking? The wild thing is, the data says the answer is both. Yep, both. That national average you hear about is hiding two totally different stories. And you've got to understand that contradiction to get what's really going on. So to really unpack this, here's how we're going to break it down. First, we'll look at what this two-faced market actually is. Then we'll get into the two competing stories, the boom in new homes and the reality check happening with used ones. After that, we'll look at the one huge X factor that could change everything. And finally, we'll see where this great divide is really headed. Okay, part one, Japan's two-faced market. So if you just look at the big picture, you'll see an upward trend. But that average number, it's super misleading. It's basically mashing two completely different markets together, depending on where you're looking and what kind of home you're buying. One analyst put it perfectly. They said the reality has clear shades of difference. And we're not just talking about a little variation from one neighborhood to the next. No, this is a fundamental split in the whole market's direction. So let's start with the good news, the booming side of this market. Part two, the new home boom. Right now, pretty much the entire engine for price growth is new construction. And that engine, it's running almost entirely in one city, Tokyo. And here's the headline number that tells the story. A 4.6% jump in the average price of a new house in the greater Tokyo area. I mean, for a real estate market, a jump that big in a single month, that's just massive. And this chart just lays it all out. This is what we're talking about, the Tokyo effect in action. You can see prices are way up in Tokyo proper and the area around it. But then you look at other major areas, like the Chibu region, they're basically flat. Tokyo's boom is so huge, it's pretty much single-handedly pulling up the average for the entire country. So you might be asking what's behind this. Well, it's a really simple and powerful mix. On one hand, construction and labor costs are just soaring. But on the other, demand in central Tokyo is so intense that builders can pass every single penny of those extra costs right on to the buyers. And the buyers are still lining up to pay. But, like I said, that's only half the picture. The second you step away from brand new construction, the story just completely flips. Which brings us to part three, the used home reality check. And in this market, there's a huge disconnect between what sellers are hoping for and what buyers are actually willing to do. Now, at first glance, this number also looks amazing, right? A 6.5% increase in the asking price for used homes in Tokyo. A lot of this is because some newer, really desirable properties are hitting the market, and that's making sellers super optimistic about the prices they can get. And boom, this is where the two stories just smash into each other. On one side, you have sellers asking for 6.5% more. But on the other, buyers are actually paying almost 6% less than they were last year. I mean, that's not a gap, that is a chasm. It's a massive sign that buyers are just hitting their limit and starting to say no thanks. And the signs of buyer caution don't stop there. This number shows that the average size of the properties people are actually buying is also shrinking. It's down over 6% across the country. So people are spending less and they're getting less space for their money. It's just another clear signal that budgets are being stretched to the absolute max. So with these two completely opposite trends, what's the one thing that could just tip the scales for the whole market? Well, that brings us to part four, the deciding factor, interest rates. This is the big, scary question mark hanging over everything. And just as a quick refresher, interest rates are basically the cost of borrowing money. So if they go up, your mortgage payments go up. And when that happens, buyers can't afford as much, which cools off demand and starts pushing prices down. It's a pretty direct chain reaction. Now, for decades, Japan's housing market has been held up by unbelievably low interest rates. So the question on everyone's mind is this: is that era of cheap money finally coming to an end? Because if rates do start to climb, they could slam the brakes on this entire market, even in the red-hot areas like Tokyo. Which brings us to our final section, where we put all the pieces together and look at what's next. This really isn't a story of one single market going up or down. It's the story of a great divide, a market that is actively splitting apart. So, it all leads to what you could call the polarization thesis. You've got Tokyo's new home market chugging along as the main engine of growth. But at the exact same time, that huge gap in the used market is screaming buyer caution. Put it all together, and the future looks pretty clear. Prime properties in the best locations, they'll probably stay solid. But everything else, suburban homes, places that need a little work, they're probably going to struggle. This great divide, it's only going to get wider. And so, that leaves us with one last big question. In a market that's so clearly splitting between winners and losers, a market of haves and have-nots, where does the smart money actually go? That really is the central question for anyone looking to buy, sell, or invest in Japan right now. Thanks for joining us.